Stock markets in Europe are trading slightly higher this morning, with the UK's FTSE 100 index up just around about 5 points. The Euro Stoxx 50 index higher by 9 points, but the DAX in Germany currently lower by 32 points. US stock futures are also not doing too well. The Dow Jones Industrial Average front month futures contract is currently down around about 25 points, and the corresponding S&P 500 contract is off around about 2 points at the moment. In the FX space, US dollar's better. The euro is doing pretty good at the moment. The yen is also not doing too badly. It's really just the emerging market currencies that are feeling a lot of the pressure this morning. Core government bonds are generally trading flat, seeing a little bit of demand, but nothing to be to suggest that we've got a full-on risk-off mode at the moment. And finally, when it comes to commodity prices, gold is currently off around about $4. Good morning, I'm Ishaq Siddiqui, and welcome to your daily market bite. I'm going to give you guys a quick idea of what's going on across the world today. So, overnight in Asia, we had a relatively weak session across the Asian region. It was based on two things. One, we had very poor Chinese export data. Exports for the previous month fell 18%. Big drastic drop on that side. Definitely suggests that the Chinese economy is undergoing a huge slowdown at the moment, a lot more pronounced than we previously expected, and that's worrying investors. Certainly rattling a lot of those people, those equity bulls out there who were quite positive about where the US economy was going on Friday after those payrolls number. At the same time, we've also had Japanese GDP figures for the fourth quarter, in which Japan's growth figures have been eased, revised lower a little bit, and that's raised some questions over the efficiency of Abenomics. Going into the European session this morning, we are contending with not only that really poor session in the Asian markets, but at the same time, some of that optimism that was painted on Friday after the jobs report from the US. 175,000 jobs generated by the US economy for the month of February. That's far better than what the market was expecting, for around about 149. The unemployment rate did edge up a little bit, up to 6.7% from 6.6%, but nothing to really put a tint onto that trajectory that the Fed's on right now, where it's going to continue cutting its bond buying program. I think the market is now somewhat resolved with the idea that the Federal Reserve is going to continue going down that path and not letting, easing or halting the flow at the moment of the amount that they're cutting the bond buying program by. Going into what we've got going on for today, it's a pretty quiet day on the whole. We are dealing with the news out from Asia overnight, and again, what the implications for the latest jobs data means in the US economy. And at the same time, in Ukraine, the situation still remains pretty bleak. Russian forces now have other parts of the Crimea, and that's causing a lot of worries in the overall market space, with a lot of people now suggesting that although the situation isn't as serious as some people had thought last week, with the threat of military interaction or intervention by Russia and Western forces being very low, it still means that we are having a pronounced affair in Ukraine, which will stand to dent Ukraine's economic prospects in the long term. That is all for your daily market bite. Tune in for another one tomorrow. Cheers for watching.